Welcome to today's event organized by the Uganda Chamber of Mines and Petroleum. And this is really our end of month industry engagement and dialogue, one of the many that the Chamber has been and continues to organize. And this particular one is around limitations to in-country value and how we can deal with that. I don't know if the music can be reduced a bit in the background. Thank you. Thank you. That was a bit loud. So once again, good morning, ladies and gentlemen. You're welcome to this industry dialogue for the end of month organized by the Uganda Chamber of Mines and Petroleum. Lead sponsor being the Absa Group, which we're very proud to associate with. Thank you so much, Absa, for sponsoring this. So this morning we are tackling one of the key aspects or the key areas for us as a Chamber of Mines, which is how do we make sure that as we continue to prepare ourselves to participate in the oil and gas sector, we are supporting local content, and as a result, we are supporting value retention within the country. So the session this morning is looking at the limitations around value retention, and I will not go into detail at this point, but just to give you a brief of what it is. We have speakers from different organizations that are highly experienced that I'll be introducing shortly. But before I go into that, I would like to invite Leah to take us through a safety moment, following which I'll then tell you what the program will look like for the day.
Yes, good morning, ladies and gentlemen. Leah Nachembugwe is my name from Bureau Veritas, a conformity assessment body. Safety moment is about working from home places, trying to limit the spread of COVID-19. Working from home is becoming the new normal. But in terms of health and safety, it has presented a couple of challenges. And this includes how we sit. So it's quite important to check our posture regularly so that to see that our back is supported to avoid injuries that might be there in future. Don't ignore discomfort in case you feel uncomfortable. Please make sure that you check it out because it might lead to an injury late in life. Take your full breaks. If it's time for lunch, break off. When we're at home, we tend to want to finish work, but take your full breaks. It will help you to avoid injuries. It's also quite important to avoid distractions. If there is any noise, try to mask it as much as possible. Wear earphones, wear earmuffs if you're working from home so that we can avoid the high noise levels that might be at our workplaces, that are our homes. There are also some effects that come from glare. This is a light that comes off our computers. If you have filters, put their filters within your computer so that you can avoid the glare. See how your light in the house is positioned so that you can avoid these eye injuries. Apart from physical stress or physical health, there is also a concern with stress that comes with not socializing because you're at home. Socialize as much as possible so that you can be able to keep in touch with people and avoid such stress. And lastly, it's quite important to exercise. So make time so that you can exercise, plan for it, to ensure that your health and wellness while working away from office is also okay. So as always, Bureau Veritas is there to support you for all your health and safety inquiries in terms of conformity assessment. Thank you for listening to me. Have a wonderful time during this oil and gas dialogue. Thank you, Pamela. Back to you.
Excellent. Thank you so much, Leah. We do appreciate the safety moment, and it's easy to forget some of these things while we are busy typing away on our computers or getting busy with many other things while working remotely. So thank you. So we're going to move into the next part of our program. So with us here today, A number of people. We have Mr. Agre Ashaba, who is going to be giving us the opening remarks, and I'll introduce him shortly. We have a team from NFT Consult or Nft Group, Mrs. Elizabeth Ntege and Ms. Annette Chijagulwe. I hope I've pronounced that right. We have a team from ABSA, led by Mr. Philip Niwamanya. And then we have Minet, led by Mr. Morris Amogola. So that's the team that will be speaking to us this morning. And as and when they're about to come in, I will explain what they will be speaking to us about. So I'll start off with Mr. Agre Ashaba, who is representing our chairman for the Uganda Chamber of Mines and Petroleum, who wasn't able to be here this morning. So Mr. Agre Ashaba is the General Secretary for the Uganda Chamber of Mines and Petroleum, but he is also the General Manager for GCC Services, which is a contractor in the oil and gas, or a service provider in the oil and gas industry. Agre has vast experience within the oil and gas industry, but he has also worked with the chamber and supported the Uganda Chamber of Mines for a number of years now, over 10 or so, if I'm not wrong. So Agre, you're most welcome to give us the opening remarks before we proceed to the next part of the program.
Thank you, Pam. Thank you, Pamela, and good morning. And I would like also to welcome all the participants who are with us this morning. I bring you greetings from the Uganda Chamber of Mines and Petroleum, obviously, especially from the chairman, who unfortunately cannot be able to be with us, Mr. Patrick Mwehire, and also to say that thank you for endeavoring all the time to be able to be part of these engagements, because the reason why we exist as the Uganda Chamber of Mines and Petroleum, and largely why we keep on volunteering to make sure that we can be able to reach as many people as possible. And for obviously the speakers who are sharing their knowledge, time and expertise and experience in making sure that they can be able to speak to wider audiences in regards to the oil and gas sector. As you might be aware, the Uganda Chamber of Mines and Petroleum just recently came into new leadership, the leadership that is now currently being chaired by Mr. Patrick Mwehire. The old leadership of Honorable Dr. Eli Karuhanga, the tenure ended, and so we have brought in a bit of new blood and fresher blood that thinks that should be able to take the chamber forward. We are trying also to refocus the energies of the chamber right now from advocacy, which has been largely making up almost 80% of the work of the chamber in the last couple of years, to now more into what value maximization or what value retention can Ugandan companies have from the oil and gas opportunity. We have drawn up a matrix to see how we can measure ourselves in how we see Ugandan companies, entities, and people being able to be meaningfully employed or getting opportunities to do work in the oil and gas sector as one of the things that we shall be pushing for as a chamber, to make sure that there is opportunity for work, there's opportunity for business, but meaningful business and meaningful employment. And that will probably make up almost now 70% of what we shall be doing as a chamber going forward. And we hope that the companies can move alongside us, and we can always lobby and support and make sure that we bring the respective partners that will be able to support these opportunities as they open up for people and for businesses. And then also to let you know that the activities of the chamber haven't stopped. We have a couple of them coming up. We have a packed Q4, which includes also the conference in the mining space, but we also have other events around oil and gas that should be happening. They will be circulated by the Secretariat. But I'm happy to say that as a chamber, we treasure the support from our membership. We treasure the support of the experts, the people who come and speak to us about the specific sector areas and specific sector topics that allow for more knowledge, that allow for companies and people to be able to be more engaged and see the opportunity. And eventually, everyone, or partly everyone, can be able to partake of the opportunities that are abound in the oil and gas sector. Without taking much time, I would like to hand back over to Pamela to take it away, because the experts are here. They will speak to us, and I hope that at the end of the day, we shall be able to have picked up a bit of knowledge and be able to implement whatever we shall have learned today. Thank you very much, Pamela, and good deliberations.
Okay, excellent. Thank you so much, Agre, for that introduction. That's much appreciated. I've just been reminded I didn't introduce myself. My name is Pamela Natamba. I am the treasurer for the Uganda Chamber of Mines and Petroleum, but I am also a partner with PricewaterhouseCoopers. So our next speaker this morning, going into the specific topics for the day, is going to be Nft Group. And Nft Group, as I mentioned earlier, is represented by a team of 2 here with us this morning. We have Mrs. Elizabeth Ntege, who is the founding member or the co-founder and CEO of the Consult Group, the Nft Consult Group, which is a business process outsourcing and consultancy firm. And it operates in a number of countries within East Africa, 7 of them to be specific. Elizabeth is also a co-founder of NFT Mawazo, which is an innovation hub that focuses on developing programs that use IT-enabled solutions to address challenges of unemployment. She has also been and is a business advisor at the Innovation Village. Those of us that know Innovation Village, which is it's one of, actually I think it's the largest startup business incubator that supports startups in Uganda. So she is a business advisor and integrator there. She is also a non-executive director on the board of Stanbic Bank and a vice chair, board of trustees for Chance for Childhood, which is an international NGO in the UK. Her background is one of electronics and computer engineering. So it's not surprising that she's the chairperson of the ICT Association of Uganda, as well as the Alliance for Trade in Information Technology and Services Association. Her CV is quite long. I could go on and on, but I just thought I would pick up those key highlights in the interest of time. And Elizabeth will be presenting to us together with Annette Chijagulwe, who is the human resource and business operations professional. And she's currently the general manager and head of business operations at Nft Consult. She has over 13 years of experience in the area of human resource and business operations. So I would like to welcome you, Elizabeth, and she'll be speaking to us this morning about the risks in the manpower field of the oil and gas service industry and exploring the available solutions to those risks. Over to you, Elizabeth.
Thank you. Thank you, Pamela, for that apt introduction. So with me, of course, I have my GM, Annette, and I'm glad and honored to be sharing this space. So I'll very quickly put up my presentation, if you will allow me to share that. So today we are going to be speaking about, the limitations that we have in the oil and gas industry with regards to manpower risk. Yeah. And before we go through that, allow me to, explain to you a little bit about what NFT does and how we've been supporting this industry over, I think we got in around 2012. So I'll quickly start, and I'll hand that over to Annette to do, and I'll go through the risk side. Okay. Thank you. I'm also going to shut down my video because it's quite heavy and it may disturb you in terms of getting what you need to get from this presentation. Thank you.
Thank you, Elizabeth, and thank you, Pamela, for the introduction. Good morning, everybody. My name is Annette Chijagulwe, and I will present to you briefly on Nft Consult Group. NFT Consult is a business process outsourcing firm, and we have been in this business since 2005, specifically in the oil, gas, and energy industry since 2012. We are located in 7 East African countries, and most recently have set up in the UK. We have a manpower headcount of 82 core staff and several contractors working for us in different industries. Shortly, you're going to look at a video just highlighting our key solutions before we get into the meat of our discussion today. Elizabeth, we can't hear the audio.
We don't hear the, yeah.
That's fine.
Okay, so that is basically our footprint. All right, for more information about our services, we'll encourage you to look at our website at www.nftconsult.com. Okay, so I will speak briefly about the bouquet of services we are offering under the oil and gas support services. We have a pre-qualified database. If you recall, the build up to the oil and gas sector has been going on for several years. And currently we have over 50,000 pre-qualified personnel, and this is local content and experts as well, who are ready and willing to take on the jobs. We also have manpower outsourcing contracts that we're currently managing for the key partners in the oil and gas sector. Local content development, basically at the forefront of the service provision, including community initiatives, monitoring and evaluation, that we're doing, and upskilling as well. And then at the bottom of that, of course, is the core employee support. So apart from the employment, meet and greet services, onboarding, the employee insurance, which I'm sure Minet will point to, and any other work tools of trade to ensure that the personnel are able to deliver. We look at several partnerships, and here I will highlight 3. Of course, the contractors, the people who do the work, are at the forefront of our delivery. And there we're looking at what do they need? They need job security, engagement, but most of all, welfare provision over and above the paycheck received. The clients who are taking on this business, what value addition initiatives can we commit to them? The monitoring and evaluation, of course, very keen on compliance as well, but also the solutions provided. And at the bottom, of course, we know we work through partners, we have suppliers we operate with in terms of the third-party provision. And I'm happy to say ABSA and Minet are some of those partners providing oil and gas solutions as well. Back to you, Elizabeth, for a highlight of the next sections.
Thank you. Thank you, Annette. Thank you, everybody. Again, we want to thank the Chamber for giving us this opportunity. So today we're here to talk about risk, especially in manpower and associated solutions that are offered or are available or could be offered over the long term. What we've noticed, though, is that this is something, if you're trying to engage in this industry, you have to be in it for the long time. You know how long it's taken us waiting for FID, but you have to be engaged and you have to be, in it for the long time. I won't take a lot of your time because when we start talking risks, the opportunities and the related parties are quite long. I'm only going to talk about at least 3 of those that are that we need to keep in focus as we prepare to start working really hard in this industry. So what's at stake? 2 days ago, I saw this, I think it was on LinkedIn, on social media somewhere, where they were commenting on how much money is being poured in the oil and gas sector. And in Africa alone, they're looking at about 123 billion worth of projects in the oil and gas sector. So clearly, there's a real focus in terms of this industry and in this sector within the African setting. But with Uganda specifically, we're looking at least, I believe, around 23 billion. So our focus through Uganda, through, of course, what has been planned through the National Development Strategy and Plan, is to retain local value locally. And therefore, they have put aside a portion of the $23.5 billion that are due to be invested here in value retention. And if you look at this, 40% of the 20 billion that is being put aside for investment has been scheduled for local content, so that we can retain that value. And with regards to the 3.5 billion that has been put aside for the exploration phase, we are looking at 28% of that being ring-fenced for local value creation. So these numbers are quite high. But remember, it's going to take us a bit of time from FID to consume this, but we have to take precautions and we have to prepare for this. So we are hoping that as a result of this and this investment, we'll be looking to building legacy projects that, like we have seen in Nigeria. And as a result, there's a bit of services and products and services that have been ring-fenced locally for Uganda and Uganda businesses. So when we look at manpower, bearing in mind how much money that is due to be poured into this industry or has already started, we sectorize manpower risk as a non-financial risk. But it's really key because it's really a big threat to most organizations. And we're just going to look at 3 areas. And I really wanted to go through this quickly because I don't have a lot of time. And most of it is going to be around compliance risks and what we can do around that, operational risks, and most importantly, the controls that we need to put in place to address this kind of risk within our organization. So non-financial risk as it stands has a lot of downsides if it's not managed, and these downsides can be quite large, and most institutions that fail to manage this have seen a very big impact. So we need to prepare for that. And this includes something like financial losses, which can be quite significant, bearing in mind the investment that we are looking to. We probably see some environmental disasters, and those can take years or decades to clean up. And at the very end of that spectrum, you will even have death, So that is something that is why this is very important and very key for us to prepare. So the impacts encompasses direct losses. At the end of this, we can have you could have fines, litigation, and a lot of expenses that will go in when it comes to mediation and issues of compliance lapses. So if we take one in turn, let's look at how that compliance risk affects us, non-compliance risk. So we need to focus on some critical areas when it comes to non-compliance risk in general. And overall, it requires us to focus on certain roles and responsibilities that companies have. So I'll ask Annette to join in as and when you want to, especially on the side of what NFT is doing. Sorry, I hadn't mentioned that.
Okay. Okay.
Yeah. We need to align when it comes to overall roles and responsibility. Yeah? We need to an alignment in our strengths, end to end in terms of accountability, to increase our effectiveness and our efficiency in delivering our services. So you need to identify those roles and responsibilities as much as possible. Yeah. Secondly, we also need to look at our key stakeholders, whether they are within our organizations or outside. Identify those key stakeholders, look at what their risk appetite is, assess the highest risk, and then use certain methods to either tame those risks, execute on that, and find some mediation around that, immediate remediation around that. So when it comes to solutions, what do we need to do in this area? We're looking at business registration. What is important? Registering your business, as well as in this case in Uganda, we need to register on the current PAU database. When it comes to things like statutory compliance, those are very, very important. Here, you need to have very clear employee contracts and workplace policies that address risks in the workplace. Yeah, statutory compliance around taxation, withholding tax, pay as you earn, VAT, and of course the need for us to pay corporate tax, etc. When it comes to payroll and pension, we have a pension, and even I believe even our casual laborers at this rate are also contribution to a pension because of the way, the nature of the job. You really can't say that they are only working for 6 months. It's a kind of thing that we have to look into in terms of they, even at that level, need to contribute to payroll and pension. And most importantly, you need to have workplace insurance. I'll let Minet talk to that, one of our speakers that is coming on, the type of insurance that is required to address the risk in the workplace. Annette, you can speak, you can talk to any of these ones if you want.
Okay, just in addition, when you spoke about the business and registration compliance, it's industry specific as well. For example, NFT is a manpower outsourcing provider, and that means for provision of services in oil and gas, we have to be compliant not only to PAU, but also our regulator, Ministry of Gender. So apart from registering, it is ensuring you do your annual or quarterly reporting as required, and also embed it into the processes that you employ. So Elizabeth has spoken about contracts and the payroll management, as well as some other welfare provisions that need to be vivid in your process if you're looking at value preservation and of course sustainability through the life cycle of the oil and gas projects.
Yeah, great. And so when it comes to resourcing and making sure you're adequately resourced, and I'm not talking about the money, and here I'm talking about the skills and the skill sets. Yeah, we need to focus on actually continuously developing this capacity. Other than just identifying them, we need to focus. And within the COVID sector, this has become the COVID environment. This has become a little bit more difficult, I must say, from what we had when we were beginning the exploration of oil, because of the need to keep people safe, the need to have dual shifts in terms of people coming on and off, and just in case you have an outbreak on the on the campsite or in the areas where they're working, you need to put people in isolation. But because the business doesn't stop, you need to bring people on to take over. So in cases where they were expecting us to have 10,000 workers, you really need to to prepare for about 20,000 just in case that happens. You can go on, Annette. What are we doing around this resourcing and capacity development at the moment?
Okay, speaking specifically, working amidst the COVID scenarios, yes, of course, ensuring we have optimum resources for every role or key role, as well as a transfer of skills. So wherever you have a key engineer, you need to have a backup plan. You need to cost in scenarios of sick leave. You need to cost in scenarios of tests at regular intervals, accommodation if they need to go into isolation, as well as, the total employee welfare and well-being for this resource to be able to perform. We've also leaned heavily on technology. It's no longer an 8 to 5 job provision. We're all, working from home, working remotely, but also ensuring that you're fully available for the employees. So yes, are they able to call a call center? What is the escalation process? How are issues resolved with not only the employee, but all the other suppliers? So it's 24-hour support to ensure that the resources placed are able to deliver.
Okay. Thank you. And of course, we don't work in isolation. So we have to also be responsible for third-party risk and capacity development of our suppliers and people we work with. So the risk doesn't stop only with you. It also continues on to with anybody who you're working with or who's supplying through you to your client. Do you have any additions here, Annette? That's fine.
None.
Okay, thank you. So let's look at the other non-financial management requirement. And this is a focus on classic risk management enablers, things that enable certain risks, especially within this industry. So we're looking at making an integrated risk taxonomy the norm in all organizations. We need to set up effective structured control frameworks, which focus on prevention. You'd rather prevent than actually do any firefighting. And of course, deliver management level forward-looking risk assessment KPIs. And here, we're looking at preparation, prevention, in case such a risk, because risk never goes away. It's with us for a lifetime, And so it's important that you look at international accreditations that are available within your sector, within your area of control or where you're offering. For example, we have international ISO certifications that are available across the board, HSC certifications that you need to look into, even if you were doing you're providing services in the hotel industry or in whichever industry it is, there is always a certification or a requirement or a qualification required for health and safety. And another one is around quality assurance certifications that could be available, but if not, make sure that your people are trained or the capacity is built in and around this. Of course, the manpower, Annette, you mentioned that they're divided into like 3 different sections, 3 different areas. But manpower qualification and certification is really key when you're presenting those type of people in the industry. And of course, keep a lookout for how we impact both the community and the environment in which we are operating, because through impact assessments and monitoring and evaluation initiatives. So any additions to this, that I have missed out?
None, Elizabeth.
Okay, so definitely on top of that, we have to look at what policies, processes, and on-site representation that is available for you to manage risk. For example, and these are very quick examples, the use of fire marshals, having a risk audit committee within your organization, risk representation reps or ambassadors, either on site or off site. And of course, most importantly, a visible dashboards on all KPIs around risk management. And so this is something you can look into, and it's very easy to implement among your people and have representation that will clearly focus on policies, processes, and ensuring that the risk culture is embedded among not only your core staff, but your contractors and also your third-party suppliers. So the other important thing and something that you really must look out for is that manpower and people are the biggest risk, people that cause the biggest challenges as far as the risk is concerned. So we encourage, although we want to make impact, we encourage you to look at innovative management systems that will eliminate some of these risk challenges that we are having. For example, having a health and safety monitoring and management system on board, a technical one. I am an engineer, so I tend to have like these kind of things. So they eliminate a lot of those risks when you look into automating some of those services, looking at a quality monitoring and management system as well, and of course an environment and community impact assessment system. Not only are we looking at monitoring and evaluating how we impact those communities where we're working and the environment, but also learning from some of these mistakes that we may make. But I hopefully not enough to close down the operations at this time. Yeah. Anything else, Annette, here you want to add?
Nothing, Elizabeth. I think we
Okay.
can move on to the concluding slide.
Yeah, so finally, we want to focus on business transformation because we cannot stay in limbo around this. So our organization, the policies are around structure and strategic remediation, and of course, transforming the culture in which our people are working through things like what we just did here, a safety moment every day, and embedding that culture within our people and the people that work with us. So here we're looking at having an empowered audit function within our organizations with effective tools and infrastructure and capabilities among the people that take on this role. Of course, I've spoken about the strong culture where controls frameworks have been embedded into the organization's DNA. And then we're looking at third-party risk management. Don't forego your suppliers and those people who you work through to deliver the service. And of course, the focus on automating the use of innovation solutions. So this, in a nutshell, will help us to focus on those non-financial risks that we could overlook and ensure that our manpower is well and able in delivering on their KPIs. So finally, I wanted to show this for those of you who have been here. We've been waiting for first oil or FID, and we know that this is going to happen. So I found this at the Uganda online, and it shows where we have come from. NFT just came through at 2012, but we've been at it since 2007. We came in around 2012, yeah. Here we are, 2021. We don't know when first oil will come in, but from all things, we are hoping soon, but we need to prepare. And there's a lot at stake. And in this case, when it comes to risk management, we believe that all life is management of this risk, and it cannot be eliminated. We just have to manage the risk going forward. And I'm going to leave you with this, and knowing that it's it's around the corner, and we just need to be prepared, and we have time, and we have the ability as Ugandan entities to be able to deliver this one. So thank you for listening to me and Annette, and we will entertain questions and any Q&A at the end of all the session. So I'm going to hand back to you, Pamela, to introduce our next speaker. Thank you, Annette. Bye-bye.
Thank you.
Okay, great. Thank you so much, Elizabeth and Annette. We do appreciate the insights that you have shared with us this morning. I will encourage the participants, the listeners, to type any comments or questions that you have for Elizabeth and Annette in the chat. We will have a Q&A session at the very end. And also, while we are doing this, let's share our intros so that we know who has attended this event and which entity you work with, or if you're self-employed, what exactly do you do, so that we are able to interact meaningfully later. So we are going to have our next presentation from ABSA, the ABSA Group. And with us, we have Mr. Philip Nwamanya. I know there's a video that is going to be played before he speaks, but before that, I'll quickly introduce who Philip is. He's the sector head for oil and gas at ABSA Bank, Uganda. And he has been with the bank for a number of years, but before that, he also was leading the different roles, including strategy and business management across the bank, which included business planning and also acting as the chief of staff and strategy, where he was responsible for strategy development and execution. Before ABSA, he's worked with KPMG. He's a member of the Association of Certified Chartered Accountants and the Institute of Certified Public Accountants of Uganda. So what I didn't mention, or what I need to clarify, is that currently he heads oil and gas and value chain banking at ABSA Bank, Mozambique. I hope I'm right, Philip, or that's your colleague who was supposed to be with us, but who is not with us. So ABSA, Philip, you'll clarify on that, but he heads oil and gas for ABSA Bank in Uganda. So over to you, Philip, so that we can hear what you have to say about the financing risks in the sector, which is very critical. And I think for all of us here, we will agree that we cannot speak about value retention in the oil and gas sector in Uganda without speaking about financing. It is one of those risks that is critical, and it is important for us to understand what are the risks and how do we circumvent those risks or go about them for us to meaningfully participate in the sector. So welcome, Philip.
Thank you, Pamela, and good morning to everyone. Allow me to share my screen. Okay, moderator, please confirm that you can see my screen.
Philip, we can see your screen.
Okay, thank you, Pamela. I would like to start by making a clarification. So my name is Philip Nwamanya, sector head oil and gas, ABSA Bank, Uganda. I think there was a mix-up with my colleague that heads up the oil and gas business in Mozambique. So starting off with the financing risks and our solutions at ABSA, I just want to start by acknowledging the importance of oil and gas to the Uganda economy. When you think about the investment that is going to come through in the development phase, the development and construction phase of $20 billion, which when you put it in context and compare it to our GDP, which is currently at $40 billion, you see that those investments are going to contribute more than 50% of our GDP. if you look at it from a jobs perspective, we expect 150,000 jobs to be created in the sector. In terms of foreign direct investments, we expect an increase of over 60%. And then when the production and construction phase is done, we expect $40 million in terms of investment in the operations and maintenance state. So the oil and gas sector is quite important to the Ugandan economy. And I would like to thank the Uganda Chamber of Mines and Petroleum for putting together this dialogue, which helps us tackle key issues in that space surrounding value retention, which directly ties into local content. So coming to the financing risks in the oil and gas space. So like I've said, the oil and gas space is unique. The kind of financing that is required in most cases is short-term, but also we know that that financing is tied or is tagged to high standards in the sector in terms of adherence to international standards and the ISO standards that the earlier presenters have touched on. But also it's important to note that financing in the oil and gas space is typically structured around contract requirements. And that will be the focus of the risks that I'm going to highlight from a financing perspective. So the first risk consideration for us as a financial institution really is around payment risk. And what we look at around payment risk is to see the capacity of the employer and the contract terms that have been awarded to the local company. So speaking of capacity of the employer, we look at the ability of, say, the EPC to pay on its contract obligations. And then from a contract perspective, we look at the key clauses in the contract that might hinder or stop you from receiving the cash flows coming out of the contract. And when we look at the mitigating factors that come out of or that are tagged to the payment risk, the first one that we do as a bank is that we take a view on the employer's capacity. So we do a financial assessment of the employer and then take comfort from that the employer can meet their obligations under the contract. We also look at the contract just to make sure that there are no legal clauses that might be able to, or that might stop the contract cash flows from coming through. So by doing those two, we then are able to mitigate payment risk. The second kind of risk that is tagged to financing in the oil and gas space is around the performance risk. And performance risk really speaks to the experience of the company. So here we are speaking about the local company here. What is the experience? What is the track record of the company in executing similar contracts, say in other sectors? And then we also look at the financial performance of the company. And under financial performance of the company, we're just trying to make sure that the company is generating free cash flows that can help it to execute the contract. So how do we mitigate payment risk from a bank perspective? The first one really is around looking at the performance record of the company on similar contracts. So it is important for you to have sort of the company CV that highlights what you've done in the past and how you performed on that. But then also where, say, we've identified some performance issues, we can do risk sharing where we get into a risk sharing agreement with an insurance company such as Minet that we have on the call today. Or if you have a parent company, we can get into an arrangement with your parent company to sort of risk share and be able to support the company. But then also from a performance risk perspective, we would also encourage our local companies to get into joint ventures with companies from other countries that already have the expertise in this space. We recently saw the signing of an MOU between the Oil and Gas Association of Uganda and the Oil and Gas Association of Tanzania, which is really aimed at fostering formation of joint ventures. So forming a joint venture really is one of the ways we can use to mitigate performance risks. The other risk that would come out from the oil and gas space is around the nature of the asset. So when you look at the assets that most of the players in the oil and gas space want to purchase to execute on their contracts, these are highly specialized assets. And because they're highly specialized, you might not get ready market in case something goes wrong and you need to offload the asset. But how do we mitigate that from a banking perspective? We try and make sure that we ring-fence the contract cash flows and make sure that you open a contract account with us and make sure that all the proceeds from the contract come through that account. Then also to mitigate the risk around that, we'll ask for an equity contribution from the company. Typically, we would ask for 20%, but there is room to accommodate a lower contribution depending on the circumstances of the financing. And then we also try and tag the facility tenor to the useful life of the asset so that the asset doesn't get utilized before its useful life is up. Then the last risk from a financing perspective really is around the environment and the social risks. And this is a risk that we've heard about in the oil and gas space, especially in the 3 projects that we're going to start seeing undergo execution in Uganda. And here we are really speaking about environmental concerns such as impact on biodiversity in an impacted area or social concerns such as displacement of people. So what we look at from a banking perspective, one, around displacement of people, we take a view on the resettlement action plan of the company just to make sure that it's robust and it has been approved by the relevant authorities. We also look at the livelihood restoration plan of the company just to make sure that it has also been approved by the relevant authorities. From an environmental risk perspective, we take comfort from the environmental and social impact assessments that are done by authorities such as NEMA and any other regulatory body. So overall, those are the key risks that we look at from a financing perspective. And I'll now move into what solutions we provide from an ABSA perspective. So from an ABSA perspective and looking at oil and gas, as I mentioned at the start, financing in the oil and gas space is typically structured around contract requirements. And at ABSA, we provide financing across the life cycle of the contract. So right from the bidding stage where we provide secured and unsecured bid bonds to help you at that stage with the bidding, to contract award where we provide you with performance guarantees and advance payment guarantees that again might be required by your employer before you start to execute on the contract or before the contract cash flows can be unlocked. Then during contract execution, we provide a wide range of solutions from contract finance to invoice discounting to commercial asset finance and all these other working capital solutions that we can provide as a bank. And then lastly, at the contract completion stage, we also provide solutions such as retention guarantees. So we are with the customer or with the local company from day one, and that is at the bidding stage, right through contract award, through contract execution, and through contract completion. So we make sure that we provide solutions across the life cycle of the contract. So when we talk about in-country value retention, you cannot talk about value retention without talking about local content. We all know that local content is the main driver or the main engine through which we can retain value in country. And from an ABSA perspective, we have a passion for supporting local content. If you've seen our positioning in the market, we believe in Africanacity, and that is finding a unique way of getting things done. And that by extension means or implies that we do support local content in the communities. And for us to support local content, we start from the point of what are the key challenges that the players or the local content players are facing in the industry. And we have 3 of those. So we have a lack of collateral, we have lack of financing itself, and then we have lack of business development skills by the players in the industry. So there is a willingness to participate, but the companies do not have the skills to participate. So how do we address these concerns and these challenges as a bank? The starting point for us is a solution that we put in place specifically to support the oil and gas, and that is the enterprise and supply chain development. So under that, we offer a unique client value proposition, which is based on 3 pillars. So the first pillar is lending based on forward-looking cash flows, and that speaks to the contract cash flows that come out of after you've executed on the contract. We also provide these solutions to customers within our existing corporate value chain. And this really means that we need to have, we do not need to bank the corporate, but we need to have an understanding with the corporate, which in this case, in the oil and gas space, would be the engineering, procurement, and construction provider. Then the other key feature of that proposition is that the lending is uncollateralized, meaning that we typically not request for collateral. If one, we have that understanding with the EPC, and if two, we've taken a view on the contract and are comfortable that the contract and the cash flows from the contract can support or can pay off the lending that you require from the bank. From a product suite perspective, under this proposition, we have a wide range of products from asset finance, working capital, invoice discounting, and all these other products, as you can see in front of you. But when we think about the benefits that accrue to the SME from this value proposition, the top one is the non-collateralized lending. And this lending can be also done at preferential rates. So if we get into an arrangement with the EPC, we can agree preferential rates for certain entities. So that is one of the benefits to the SME. Then through this proposition as well, SMEs get access to business development and technical capacitation through our SME Academy. I'll just touch on that in the next slide. And then the SMEs get access to technology and tools that help them, say, with bookkeeping, tools that help them with financial reporting. And then as well, market development, because then we're able to connect these SMEs to the anchors or the key corporate clients that we do have in the bank. From a corporate perspective, the benefits are wide as well. So leveraging on this proposition helps the corporate to meet its local content requirements. And then it also helps a corporate reduce on the risk of supply chain disruptions that we've seen in the past, where maybe the contractor, because of lack of financing, is unable to deliver on the contract. But when we do, or when you leverage this solution, then you can sleep easy at night knowing that the contractor would definitely be able to deliver on the solution. Then now speaking to our SME Academy and our proposition over and above the financial proposition, so speaking to shared value that we do provide as a bank. So we provide tailored training that is delivered through our SME Academy, the ABSA SME Academy. And how we deliver that is through skilling partners. So we partner with someone from health and safety. We partner with someone from licensing and certification. We'll probably partner with a law firm to give us the legal side of things. And then we'll bring in our own experts to also tackle things like contract management. So we bring all these experts together under the umbrella of our SME Academy and deliver this tailored training to the SMEs just to improve their capacity and also help them to deliver on the contracts in the sector. But also, away from the SMEs that are trained in the academy at ABSA, we also foster capacitation through business-to-business coaching. So given that we have a wide footprint across the African continent, we are in over 12 countries. If you think about countries like Mozambique that have had oil and gas and benefited greatly from it. So at ABSA, we do have the capacity to link some of the local players with potential JV partners from those markets who can then partner up together and do joint bidding and then do joint execution on the contracts. So in summing up, Madam Moderator, is that at ABSA, our North Star is bringing possibilities to life. And we are committed to bringing Uganda's oil and gas possibilities to life. Please reach out to us. I'll share my contacts in the chat, but you can also walk into any branch and ask about what solutions we provide in the oil and gas space. and we should be able to support you deliver on your obligations in the sector. Thank you, and back to you, moderator.
Thank you so much, Philip. That presentation is insightful. I see there are a few questions starting to come in, and I'll take note of those so that you can respond to them when we get to the Q&A session. But thank you, that was helpful. Martin, you can just play for us a quick video for a break as we prepare for the next speaker.
That's Africanacity. That's ABSA. Whoever you're doing it for, we'll help you get it done. Simply. That's Africanacity. That's ABSA.
Okay, thank you, Martin. We will quickly move on to our next speaker for this morning, next and last speaker for the morning, who is the CEO of Minet Uganda, Mr. Maurice Amogola. As Minet, as many of us would know, is a Pan-African firm that specializes in insurance and risk management, plus human capital solutions. Maurice is their CEO, and he's also an associate of the Chartered Insurance Institute of the UK. He's a chartered insurer, as well as an associate of the Chartered Institute of Uganda. He has been the past chairman of the Insurance Brokers Association of Uganda, and as well as the chairman of the Insurance Institute of Uganda. Maurice has been an insurer for a while. He has over 30 years experience, and he's an insurance consultant both in Uganda and in Kenya. So having heard from Elizabeth and having heard from Philip concerning the manpower risks as well as the financing risks, Maurice will wrap it up all nicely in terms of what is it that we should be doing, or how do we mitigate the risks that have been discussed this morning. So Maurice, over to you. You're most welcome. Maurice, you're on mute, please, if you can unmute yourself. Thank you.
Thank you, Moderator Pamela, distinguished guests, ladies and gentlemen. It's a pleasure to speak to you this morning on this very topical issue of risks. Risks is bread and butter. Every day when we wake up as Minet, we're always thinking about our customers' risks, how they are mitigated, and how then they are transferred to an insurance program that should be able to support the business or the person who has those certain risks. So, of course, we've had presentations from two eminent companies, Nft, which deals with manpower, and ABSA, which is in financing. And the risks then manifest into what should be done in terms of processes. So allow me to share my slides and just try and take through what they have done and what then insurance plays a key role in helping balance the equation. Let me share my slides. Are we there?
Yes, we see your presentation. Just put it in presentation mode, full screen mode.
Okay, I hope that works. Okay.
Yeah, perfect.
So in looking at the risks of manpower and financing, we start, first of all, these are big projects, and we know, as ably indicated by my friend from ABSA, the investment is very substantial, actually $15 billion into the oil and gas sector. But before we look at the specific areas of manpower and the specific areas of financing, let's just pause back and look at what are the issues that will affect this project. Some of them, the risks will be physical, some will be already been picked as financing, some will come from third-party involvement. And we have also said that employees who are very, very critical in this sector, without employees, you will not run any company. You've seen that COVID has affected us worldwide, and most economies have had to scale down because the employees who are very vital in running these particular organizations have had to stay home or look for mitigation for the risk of COVID. So this is then wrapped up into what are the risks. I've tried to categorize them into three that will affect many of these projects that will be within the oil and gas sector. There will be statutory requirements. These statutory requirements have been enacted by various authorities, and more specifically that touches on employees, and I'm sure the colleagues from NFT, they will be following the Employment Act. You see, the Employment Act spells how you employ, what processes you put in place, remuneration, health and safety, and all aspects that touch on employees. And then the other statutory requirement when it comes to oil and gas will be motor third party, which is basically if you are running any motor vehicle on a public road, this vehicle will have to have minimum insurance. But as we talked about minimum insurance, that's not enough. The oil and gas sector, because of the very high standards in health and safety, have very clear indications of what sort of third-party liability you will have to have if you are working within the oil and gas sector. So because of the contract you'll have entered into with them, you will have to enhance the third-party liability to fit the contractual obligation of the contract that you'll have entered into. And we know that the law requires us to insure our workers. And so the minimum standard is to take on a workers' compensation insurance. And this then provides the minimum also in terms of mitigation in case an employee is injured. Very clearly, you are supposed to put proper processes in the workplace to ensure that the employees are safe. But should an unfortunate situation occur and an employee is injured at work, according to the Workmen's Compensation Act, then the compensation should be provided to the injured party. And of course, then there will be liability. Liability by virtue of contracting, liability by virtue of other statutory requirements. You've heard my colleague in ABSA also mention about environmental liability. These will be picked under the contract, and limits will be set. So as we are reviewing the requirements of the project, we'll be looking at all this and then reducing them into an insurance program. But that is not enough. Even when we reduce this to an insurance program, there are obligations that every contractor would have to take to ensure that the risks are mitigated. And these are the business processes that we normally put in place. Of course, there will be the contract requirements, and these are the contractors will be required to have that. And some of them already alluded again by my colleague will be the contractors or risk insurance. There will be the bonds. And when a bank has given you a loan facility and you have had to collateralize, then that collateral, if it is land, we don't insure land. But if it's a building, if it's a machine, then that machine must also have insurance, necessary insurance, so that that collateral is there. Again, lenders' requirements, which again fall under what ABSA would be doing. Definitely, they will be looking at collateral security. They will be looking at other assets that you have. Some of the assets will be the assets you are using to perform the contract. Some of these are the heavy duty machines, the drills, and others. And then, of course, there will be bonds. Bonds can either be taken through a bank, and there is a new mooted program that involves both the banks and insurance companies, so that the cost to the client is reduced. So these are all areas that touch on both the contractor and the employee in that organization. And then, of course, what are the basics? We've just mentioned about the human resource, and without the human resource, we can't do anything. So we must mitigate risks by creating a conducive work environment. And this conducive work environment requires us to have work processes. These work processes spell out how people will leave home, coming to work, the type of transport they are likely to use, how do they then perform when they are at work, what safety measures are put at the workplace, what healthcare facilities will be put, like first aid and so forth. So these are all part of work processes review that help to reduce the risk. But after that, then you mitigate by taking insurance. And of course, the requirement to comply with all statutory requirements, and more so, health and safety. It is a part of the requirement that all employees are insured. And part of the mitigation requirements is to have a workman's compensation. And then, you know, the human resources are very scarce commodity worldwide. If you want good employees, then you will need to ensure that you provide an attractive benefit structure. And some of these benefits include a group personal accident insurance. This provides insurance on a 24-hour basis to the workforce. Group life cover, again, this just insures your life. Sometimes you can fall sick and pass on, or an accident can occur and unfortunately you pass on. So most employers, as part of their benefit structure, will provide group life insurance. Needless to say, medical insurance is like nowadays a must-have. And this has been very, very much amplified because of the COVID challenges we've been having. There are many different products, insurance products on medical in the market. What you require to do is to ensure that you have taken the right insurance for the risks you want to be covered. And of course, lenders' requirements, which means all this lender who is going to lend you 100 million shillings to execute your contract, they will have lender clauses. And these clauses are actually within the body of the contract. They will require you to ensure that your insurance program is tailored to have all the clauses. And then, of course, as I mentioned before, the issue of collateral security. Collateral security will either be in the form of a building, a machine, or land. And as I said, for land, it's not insurable, but for any building standing on that land that has a value that can be insured, as well as the machines that are either sitting in factories or are part of the collateral security. So we have been saying this for a long time, and just a reminder, these are the opportunities in the sector. And this has been ably demonstrated many times when we have been on these forums. There will be different contractors operating at different parts of this pie chart, so that you find on the red circle will most likely be we, the local companies in Uganda. That's where we'll ably work. And then the more skilled companies will operate in the black area. But again, very, very specialized. I'm sure there will be some JVs that involve companies that are operating in that sector. And then the core oil and gas risks will be in the middle, the well services, wellheads, seismic services, feed, rig hire. Those will be now the very, very, very specialized firms, but the local content law requires then certain things to be done. And I'm sure the key aspect here is to involve both the Ugandan and the international company so that it is a win-win. So for the insurance industry, all these different types of businesses which manifest in different risks and then insurable. The key is, who do you go for your insurance? Have you been subcontracted? Do you have a contract document? Can we read it? Do you have assets that need to be insured? Are you complying with all the local laws of Uganda in as far as the business you are doing, which touches on oil and gas? So this, again, just like my brother from ABSA mentioned, will create an opportunity where the local companies will also work with the foreign specialized companies, and there will be a win-win in that some of that revenue will remain in Uganda as a market. And as I will demonstrate on the insurance aspect, just like banks, they have that terminology called syndication of loans. In the insurance subsector, it's the same thing. The main local insurance company gives you terms and conditions, but his balance sheet is not strong enough to take everything that is the risk. So they will share these risks with other companies called reinsurance companies. In Uganda, we have Uganda Reinsurance Corporation. We also have PTA Re, which are all part of the mandatory sessions. We also have African Insurance Corporation. This will form part of the retention strategy so that part of this premium is retained in Uganda. Again, we, Minet, and other insurance consultants, we understand the local market. We understand the international market. We have to sit with you to plan and review your risks, look at how to structure your cover to pick all the risks that are covered there. Of course, mitigation is a must because no insurer will give you cover without understanding how you mitigate. And they only want to cover those unfortunate incidents that could happen. The limits will have to be looked into so that they're in line with the exposures of the business. The broker will have to deal with the changes and extensions as lenders require. As I said, because of the nature of this particular investment, there will be a lot of lender support. And as lenders provide the revenue, they will require this to be insured. Then we can benchmark these terms and be able to make sure if there's value for money. And of course, the insurance market is complex and requires very, very experienced hands to make sure that you get the right coverage for the risks of that business. And information is key. The starting point, of course, is the contract. If there's no contract, as my friend also in ABSA mentioned, any organization will have a history. We want to know how long they have been in business, which particular area, what's their experience, what's their manpower like. It's important to give all that information because that transparency then helps the insurer to appreciate the risk and then rate it accordingly. And as he rates it, he also gets support from the insurance subsector. Transparency, as I said, is key. And of course, during tendering, you would have to pre-qualify the insurers, or we would have to pre-qualify these insurers with you, so that at the end of the day, you are able to make very, very informed decisions as to the quality of program that you are signing off on behalf of the main contractors. And at the end of the day, there will be different policies that cover different risks. And I've just tried to put that, again, pie chart just to help you. So a contractor will have a contractor's own risk. If it's a lawyer, he will have a professional indemnity. The engineers who are doing the work of inspection will be also taking professional indemnity. Surety and performance security is basically bonds. Defects liability in case during that period when the contract is finished, but you are on maintenance. There is workman's compensation. There is plant or risks for the contractor, his equipment that he will be using. Environmental risks, marine cargo, medical insurance, as we have talked about. Travel, because as you travel, sometimes travel up and down, there are risks of also traveling. So insurance can be got for that. There is life and disability. So your consultant will sit with you, will look at the nature of your contract, and he will pick on some of these programs that then will be tailored to ensure you have a program that protects your risk. And ladies and gentlemen, that's a summary of how insurance will relate in both NFT and ABSA. The in-country value will be that Uganda has an oil and gas insurance consortium, which is basically recognized by law under the local content and will be the vehicle of retention. And of course, if some of the retention, some of the premiums are retained in the country, of course, there's also the risk that losses will occur, and of course, the insurers will pay. But by virtue that that retention is happening in the country, it will offer employment, it will offer many other ancillary services, like an insurer will use a bank, an insurer will use legal services, and so forth. And of course, even farmers, we have insurance for farmers. So there is a whole bouquet of solutions. What matters is to understand the risks and then go about looking for insurance solutions and mitigations of that. Thank you very much, Madam Moderator.
Thank you so much, Maurice. We're just on time. I guess we lost a few minutes at the start, but we will try to use maybe the next 10 minutes for that Q&A session before we wrap this up. So I see we already have a number of questions in the chat, and I'll try as much as possible to direct them to you, the specific presenters. But first, maybe to clarify, I see a couple of questions here that are sort of broad, not directed to any of the presenters here this morning. So you'll notice that our presenters here are really more of private sector and also what would be in the contractor, sort of subcontractor category. We do not have the big boys here, the likes of Total. We do not have the likes of McDermott, Sinok, and this was not in error, but we just thought we'll have this conversation at a local level in terms of what's happening within our private sector and how can we support each other. So for the questions that are directed to Total, we will not respond to that, but also to just broadly make a comment that for us as Ugandans, the focus is on what's the best we can do to prepare ourselves. Yeah, we know there's a bit of discomfort. There's a bit of, there are people who are still not sure in terms of, is this thing actually going to happen? And I'm seeing some comments in the chat. And we've walked a journey. It's been a number of years from the time that we had the exploration up to today. And if there are any of us that are still doubting, the fact that we've made significant steps, we have signed intergovernmental agreements, we've signed host government agreements, we've signed the shareholder agreement, the transportation agreement. For me, that is comfort that things are actually now happening and that we have moved beyond the point where we were, say, 2 to 3 years ago, where we were not sure what was happening. A lot of unresolved issues between the government and international oil companies that have since been resolved. You've seen people like Mark Diamond being brought on board. If we weren't sure this is happening, then probably wouldn't have people already starting to prepare the fields and getting set to progress to the next level, which would be then the extraction and the production of the oil. So I would like us to be positive for purposes of this conversation. I would like us to look at the fact that we've come a long way, and I would like us to look at the pointers that suggest that there has actually been significant movement in this sector. And so while we may not yet be there 100%, we can see for sure that things are moving and things are shifting. So moving on to the specific questions, I think I've seen about 2 questions for ABSA, and one of those questions is around how local companies can be linked to international companies. Philip, this is for you, for possible joint bidding. And secondly, how can SMEs join the ABSA Sme Academy? What requirements are there? So Philip, if you can take those first 2 questions as Elizabeth prepares herself.
Okay, thank you, Pamela. So I'll start with the first question. I think that was from TAN Energy Services around how we can link them to international companies. So what we do at ABSA is, like I said, we have a wide footprint on the continent. So we have a subsidiary in South Africa, we have a subsidiary in Mozambique. So when a company reaches out to us and says they need to be linked to an international company for JV purposes, we do reach out to our colleagues in the other countries who also reach out to their oil and gas service providers associations. Then they provide someone that can partner with our local company. We bring the both of you together and then facilitate the discussion from that point. So we get in touch with the Oil and Gas Service Providers Association in South Africa, the Oil and Gas Service Providers Association in Mozambique, and then identify a suitable partner and then bring the 2 companies together. From an SME perspective, the question around how someone can join the SME Academy, we do run adverts for the SME Academy whenever we're looking for a new cohort. We're going to be doing the sessions or the trainings that are sector specific. So when we do have an oil and gas training, we run an ad in the papers, and some of the things that we'll be looking for are things that the company should have at least sales revenue of over 100 million. Then the company should have been in operation for at least 1 year. And then the company should employ at least 5 people and have access to internet to be able to participate in the training. So those are the basic requirements, but we do put out adverts whenever we are looking for a new cohort. Thank you.
Okay, thank you very much, Philip. And I would just like to add that I hope that as we look to partner with the international companies, we are already registering on the National Supplier Database that is run by the Petroleum Authority of Uganda. So that should be a starting point. Okay, Elizabeth, I see a question around what's going to happen to the locals in Bulisa. Is there work for them? What are your thoughts around that?
I hope it's not hard.
Can we mute someone? I don't know. Somebody else is speaking in the back. Okay. So yeah, good morning once again. Thank you again, Pamela, for giving me this opportunity. What's happening to the local people? They fish and keep goats and cows. That's what the gentleman mentioned. To be honest, I don't know if anybody has been in the field to see exactly what's going on. There's a lot of work that Total specifically is doing to actually build capacity in this area. And as part of the mandate in terms of ring fencing some of the services that we are offering, we need to employ local capacity, specifically even in Bulisa and around the Tilenga project. So there is always work for them. We have work as casual laborers, but right now the work we are doing with them is actually building capacity in different areas, from financial management to technical capacity to innovation services. So and that's why I'm saying you have to be in here for the long haul. As we wait for FID, we just don't have to wait for FID to come and then we start working. So a lot of work is being done in developing capacities locally. We had a project, Annette can speak to this, where we were taking young people from Bulisa and bringing them into universities, secondary school in Budo, in Kisubi. We had quite a number, and all of those went through high school in Uganda. They brought them from Bulisa. They actually passed very well and went to university. So there has been a lot of capacity building in these areas so that the people are not just doing the local jobs, providing fish, goats, and whatever that are coming out of here, but also really doing some technical skilling and work. So we shouldn't worry. There's a lot of work that has gone in over the last 5 years, and these people are capable of offering those services. Then there was something else, I believe, in terms of preparation for FID. A lot of investment, as I mentioned, has gone in. This investment is not going to start specifically when FID comes. There's been a lot of investment. For example, Total bought the tallow rights out for millions of US dollars. That has been happening, but they have been working. What needs to happen with the teams that want to provide manpower is that manpower has both, they have to be both skilled and have the experience. So you need to look across to the other energy sectors, how you can, that's where the people are, who can then be brought in to work in the oil and gas sector when that comes, when FID is signed and the time comes for you to provide that specific manpower skills that are required to build the pipeline. So let's not just focus on providing skills in only oil and gas and waiting for that. Look at across, if you're in the hotel industry, how are you building your services to provide the service that is for the people, the necessities that are here right now, so that when time comes, like the gentleman from ABSA said, you have to have about 100 million of investment available to you. You have to have been been around for at least 1 year. You need the experience. So practice with the people we have, with the skills and services we have right now in an opposing sector, so that then you're able to provide for the oil and gas. When the oil and gas comes through, you're able to do the same. Thank you.
Okay, thank you so much, Elizabeth. And I think that's a very valid point in terms of us not just looking at this from the perspective of oil and gas. Yes, right now we are speaking oil and gas, but when you really think about it, there's a lot of knock-on effect or other services that are not really mainstream oil and gas, but as a result of this significant investment, then you're having other sectors also booming. So our focus should not just be, am I going to be able to participate with Total directly? Am I able to participate with McDermott directly? If I'm in the hospitality industry, I should be thinking about, how do I improve myself? And some of these things, I guess, as locals, because we think the oil companies are coming with very high standards. But if you just think about a service industry, if you want to operate as an international standard, there are certain basics that are required of you. And I think this sector is pushing us to operate at that level, not to be mediocre type of service providers. So that's well appreciated. Maurice, there's a comment here that I think you can speak to around how Minet will be able to provide or to support the insurance space, given that the UK does not want to insure fossil fuel projects. I don't know what you have to say about that, and what's your take from a Minet perspective and from a broader insurance perspective? Maurice, you're on mute.
Thank you, Madam Pamela. I'm good now. Hello?
You're good.
Okay.
You're good, Maurice.
Thank you, Madam Pamela. There's, of course, a lot of concern about fossil fuel internationally, and this is linked to climate change. Of course, fossil fuel is linked to a lot of pollution, and then the pollution, of course, is reducing the ozone layer, which in turn has a negative impact on climate change. All these floods and all these climate change aspects that we are currently witnessing is because of the degradation of the environment. And the indication is that, of course, fossil fuel plays a part. But I'd like to assure Kate that the market is ready. We are already working towards putting together an insurance program through the very many different instruments. What really matters is, are there insurance companies that will be able to support this? Some of them will not support by virtue of where they come from, by virtue of not supporting any degradation of the environment through climate change, and will likely remove their support for such. But there are many other vehicles that will be used to deliver the insurance solution for this project. And very many different organizations are putting in their tenders. Many companies are putting in the expression of interest, and some of them are even getting to the level of the conditional offer. So the project is on, and as you notice, there are two aspects that seem to be a concern for everybody, both from the financing aspect and from the insurance aspect, because those are two key areas that will deliver this project apart from the technical support. So as you can see, my colleague in APSA is very upbeat, and as we talked about, they will syndicate the loans to make sure there is available financing. And for we also in the insurance sector, we will have reinsurers who have good balance sheets that will be able to support what is put in conjunction with the insurance of the local market. So the project is on, we are working, and we hope to deliver this when all buttons are put on green. Thank you.
Okay, thank you, Maurice, for that. That is helpful. I think that sort of summarizes most of the questions, but I'll probably just comment on one other comment that I saw in the chat around how the contractors will, no, actually, I think, Philip, you comment on this. How will the contractors survive the high cost of borrowing? Because I think the comment here, I'm just paraphrasing it, is the contractors need financing, but then the banks take interest as high as or close to 20%. So how does that make our local contractors competitive, and are there solutions that you have to that?
Okay, thank you, Pamela. I think the cost of borrowing is an issue that has been coming up time and time again. And from a banking perspective, what we commit to is to treat each transaction or each person that approaches us on a case-by-case basis. So we do negotiate with the customers that come in, and there are certain things that you can negotiate and be able to bring down at the rate at which the entity borrows. But broadly, my response to that is that we treat each customer or each transaction that comes to us on a case-by-case basis, and we are open to negotiation. Thank you.
Thank you, Philip. And I guess just to encourage also the local contractors to think broadly, there's different ways of financing your project. You know, you may choose to borrow, you may choose to find people who want to invest in you, you may choose to do joint ventures, which is actually one of the aspects that is highly encouraged within the oil and gas sector. And all these are really aimed at looking at how best can the locals be supported to be part of this sector in a meaningful manner. So let's seek for the help where we need it, so that we structure our financial obligations in a manner that is as effective as possible to allow us to participate in the sector. And the point I also wanted to make, I see a comment that suggests that, you know, after about 2 to 4 years, the project will be complete, and then what next? But you see, we're looking at 2 to 4 years of the development of the field as we prepare for production. But thinking about the entire lifespan of the oil project or the oil fields, it's about 25 to 30 years from the point you start production, or from first oil, up to when you then decommission the project or abandon it, as you may call it. So there is quite a bit of time for us to work with. There are opportunities along the value chain, along the entire lifespan, and therefore let's be open-minded and continue to seek ways of being part of this exciting journey. I guess we'll bring it to a close here. We've used up our time and about 15 minutes above that. I would like to thank each and every one of us that has made it this morning, and I do hope you found this useful. As the chamber, we will continue to organize this, and we will continue to share topics in due course of what we shall be speaking about. Thank you so much, Martin, Catherine. I don't know if there's anything else we'd like to communicate at this point, but if not, we will bring it to a close. Okay, thank you so much.
Thank you. Have a good day. Bye.
Thank you.
Thank you.
Thank you, everyone.
Bye.
Have a great day.
Thank you. Have a good day.
Thank you. Have a good day. Bye.
Yeah, behind you.
Thank you. Have a good day.
My kids, I can't delete my kids and leave other people. Look.
Hey, Pamela. Hello? Yes, Pamela. Yeah, I've